what's going on, guys? It's actually September 23, 2 a.m. But I decided to make a trade breakdown for you guys. I posted this trade on my Instagram, and I had a lot of interaction with it about people telling me to do a breakdown. If you guys don't follow me on there, AYN Trades on Instagram. I post dimes in there, gems, literally, even free trades sometimes that you can capitalize on. Anyways, so this was a NASDAQ short, right, that we took on Friday, 15th of September. I only took one trade this entire week, which was on Wednesday, because if we see from Monday opening price at 12 a.m. to Wednesday, which was FOMC day, right? Interest rates decision came out. So we basically ranged all week till Wednesday, 2 p.m. So at 2 p.m. we had our move, and then from 2 p.m. we have this literal meltdown. Now, this trade that I'm about to review right now, 1 to 8 risk to reward, right? From the thumbnail, you can see this was basically in order to understand this trade, you have to understand why I took this fundamentally, right? So I'm going to start on the daily chart, right? That's how I start all my trades. Every single trade, you got to start with a higher time frame analysis, right? So what you're seeing right now is NASDAQ from 12th of June to today, all the way Friday, 22 September. Clear uptrend from the start of 8th of June, right? We had a rally, higher highs, higher lows, all the way. We broke this trend right here. So this was the low that was broken, right? Right after this low broke, right here, we melted down, right? There you go. So now we know that most likely sells are a more probable win trading wise, right? Like you would probably be favoring more of a seller's market. Not saying that we're in a bear market, but clear break and uptrend on the daily time frame, right? So let's go on that specific week that we took that trade on, right? This one right here. Let's go ahead, right? So in order for you to understand this trade, you have to think fundamentally and technically, right? On Friday, we knew people who are trading and people who are aware of news events, they know that next Wednesday, so this was on Friday, that next Wednesday is FOMC day, which is one of the most important events when it comes to monetary policies or the financial markets, right? So we know that we're most likely not going to make the move till next Wednesday. So this is Monday, right? This was Friday of last week. This was Monday. So since Monday, right, we have been in a 15,350 to 15,700, about a 400 point range on NASDAQ, literally ranging, right? Monday, Tuesday, Wednesday, Thursday, Friday, just up and up, down, basically consolidating for next Wednesday. Because look, even till Wednesday next week, we literally stayed in a tighter range, 250, 260 to 400, about a 200 point range that we just consolidated for. So we knew that we're not going to get a big move, right? We knew that by Friday, 2 a.m. through, right? This right here is the 8:30, right? So if this is the only candle that I'm seeing at 8 a.m. on Friday, right? I know that, okay, we're going to be most likely consolidating. So we're ranging. Now I'm going to look for sells in the higher end of the range to target all the way back down for liquidity, right? Look at this. Look at this. Look at this. Sorry. The magnet, stupid magnet. Okay, right. Look at this beautiful low, right? Don't you wish you bought at that price, right? People definitely bought at that price. Look at that candle volume at 9:30. Oh, sorry, at 8:30, right? Clear uptrend from that point. This low was untapped till Friday. So this low was formed on Wednesday. So on Friday, I'm looking for sales back into previous lows, right? So, and if you guys know fundamentally, excuse me, the US dollar has been really bullish, right? We've been getting bullish news on the dollar. What does that mean for the indices, markets, stock markets? That we're looking for sells, right? At 9 a.m. on Friday, let's go to the 5-minute chart. Right here, right? Excuse me, right here. I'm gonna pop the screen recording. I think already would pop it in the beginning of the video, but if I haven't, I'm gonna pop it right now. On Friday, this is 9:30 opening, right? Now, technically, right, we had Thursday highs taken out on AM session, right? I'm coming back, and the sell-off has already started, right? So by the time 9:30 came around, we're seeing an accelerated growth in selling pressure right here, right? That entire area, this area right here, it was just consolidating, right? And then as soon as we broke this level right here, this level right here, we sold off pretty much all the way to 15,500 psychological level. But that was not the level we were targeting, because we knew that that's the same high that we just marked on the 15-minute time frame, right? We knew that there's so many stop losses right here, right? And if you know anything about these big banks, they need that liquidity to fill in their orders. 9:30 came around. At the break of this low, I was interested in shorts, and from the screen recording that I just showed, you're gonna see the price entry that I got in on in NASDAQ 100. You can see that I got in roughly around the break of this low, right? Stop losses above this consolidation area right here. This entire, you can call it a falling wedge or whatever, but it's just a break of structure, right? Right at this break of structure, and this is called an engulfing pattern. I teach that more in my private mentorship Discord right here, right? If you know, if you trade with me, you know what that is. Targeting all the way back this low, right, for a beautiful 1-to-8 risk to reward ratio, right? Now, let me just show you. Let me just show you how impressive this trade is, right? So let's say, right, you take a trade like this, right? Considering you have a $100,000 account and you basically risk 1% per trade, right? My handwriting is so bad. Let's say you risk 1% per trade. What does that mean? You risk $1,000 per every trade. It doesn't matter how big your stop losses is. You buy your lot size, you get your lot size off that, depending on how big your stop losses is. So you will have different lot sizes, but monetary value will lose the same amount. So let's say you lose one trade. You lose 2 trades, 3 trades, 4 trades. Now you're down basically 4% on your account. You hit one of these, right? You're risking $1,000 if this stop gets hit right here to make $8,000, right? Boom. You just got back another 8% on your account. Screw this. Now you're up 4% on your account, right? Simple mathematics. Literally simple mathematics. These are the power, right? This is what you can do with high risk to reward ratio setups, right? Now, these are not always the easiest to hit, but if you know what you're looking for, you know when these are going to come, right? Especially in the New York session, 9:30, you can get some massive moves. If you're trading Forex, GBP, whatever you're trading, London session, right? I hope you guys learned something from this. I'll be making more trade breakdowns in the near future, so stay tuned. I'm signing off, man.